now. And action.
All right, we got Wednesday evening, May 5th, 2021, recording this webinar. I'm going to go first. If any of you guys have any questions for me, feel free to ask. If not, I'll go home and shut up. You can go on the mic or type it in if you want, if you have any questions for me about anything. Scanning, OTC stuff, OTC research.
Yeah, Brett, I'll go. Can you hear me okay?
Yes, sir.
All right. So what kind of scanner? So I have E-Trade, and I've been tossing it back and forth between E-Trade. Now I started a TOS, and I have a Robinhood, but with the E-Trade and the way you set up your scanners, do you have any type of a video or anything like that that can help you set up some scanners?
For E-Trade, I use E-Trade Pro, which you see on the screen. That's E-Trade Pro. All this is my E-Trade Pro. All this is E-Trade Pro. They had scanners before, they took them away. I don't know what happened with their third-party affiliate or whatever they had going on. But one main thing I use, if you go to Tools on your top left, are you using E-Trade Pro or regular E-Trade?
E-Trade Pro.
Okay, if you're using Pro, the main tool that I use in your top left, go to Tools and hit the high-low ticker. Just Tools, and then where's it at? Market depth, trade ticker. It says high-low. It's in the middle. You see the high-low? You can find that, and I'll show you the fix for it. You see it?
Okay, yep.
Okay, here's mine on the screen right here. What I do, since I'm a little blind, I make these bigger. I just go here and then display. I make it number 14 instead of number 12. I link it top right. You go link. I link one, and it links to everything. So when I change, if I click on this NMRD, everything changes. My order entry screen, I trade off my market depth, my quote montage here, which is the market depth. And then it changes. Like if I go to Jan, everything changes. So I use this more than anything, this high-low ticker. But I do link it. If it doesn't work for you, the tech guy at E-Trade told me to go to this tabs action or to settings and see in the top, if you click on this drop down and go settings, all this will come up. He told me that to highlight all this stuff, don't hit all symbols. They have a software glitch right now where all symbols are not working. So you go NYSE, Amex, NASDAQ, OTC. So if you just click those and highlight them and just hit OK, they will all come up. You can change the price. If you go here and go settings, you can change prices if you're not looking at big stuff or if you're not looking at small stuff. Like it says minimum price $5 to 500. I just leave it default. Sometimes I change it higher to 1,000 for like other stocks, but most of the time, most of the stuff we're trading is under 500. So, and I have Google and Amazon up on my watch list and Booking and CMG and all that stuff and Shop. So I don't really need to change it. So I leave it on default. But this ticker right here, high-low ticker, helps me the most. When stuff is running, if I see it, like when I saw that Moderna today, that Moderna ripped down, I didn't hear any news, and the thing shot down like 20 bucks right here. This was just lit. When I looked over here, I was reading comments. I looked over here, and this was solid red Moderna. So, and it'll highlight like 52-week highs and 52-week lows. So if it's highlighted green, then it'll give you the 52-week highs and lows. So when you guys hear me say 52-week high, 52-week low, it's because this is highlighted. It just means, you know, it could be it's at least a 52-week high, but it could be a 3 or 4 all-time, all-time high or all-time low. But so oftentimes it's a 52-week high, but it's not an all-time high, or vice versa. So that's my favorite tool on E-Trade Pro. The scanners part, the scanners they took away. So I had to do alternative scanners. It cost me $200 a month. If you're looking for an alternative scanner, if you're on Thinkorswim, there's a guy, Jay, that I know that has a scanner videos on YouTube. If you need them, let me know. I'll get them to you. But he's got the great setup on Thinkorswim. Thinkorswim has a really good scanner for OTCs. It's got a good scanner for anything. You can customize the whole thing from 5 cents or penny to $3, $4, $5, $10, whatever you want, and by market cap and by float and everything. So it's real easy to do in Thinkorswim if you have Thinkorswim. The only other thing I'm going to tell you is if you go to Power E-Trade has pretty good scanners already set up in there, and then you can customize them as well. But I don't like Power E-Trade. I'm used to using this for so many years that I haven't taken the time to change it up. I do have a few friends that were here trading in my office with me that use Power E-Trade, and the scanners look pretty decent. They got breakout scanners. They got certain price levels, all that stuff. So you might want to look if you're not real keen on E-Trade Pro, or if your heart's not set on it, you can look into just downloading the Power E-Trade.
All right, appreciate that. Thanks. That's good information. I'm just kind of getting used to both. So it used to be just the Power E-Trade. Now I'm in the E-Trade Pro trying to learn it. So okay. I appreciate that information. And then just one last quick one. I don't want to take up everybody's time, but you seem to be pretty quick with the trade ticket when you're trading pennies.
Yeah.
Can you give me a little info on that, or?
If I see something, if you go right here, you see this window here?
Yep.
This is your market movers. So if you go in, again, tools, and then you go on the middle right, it says market movers. What they have, I load this up, market movers, and then they've changed this too, because they used to be able to do 20 or 30 at a time. Now you only do 10. But like here's the RNVA trade, like here. Today. So what I'm doing is you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 ticks out of here or whatever, 8 to 17. It shows 9 ticks here. But if you're trading these and scalping these, I just have this set again, link 1. I link this to everything. And then this is right here. I highlight bulletin board, which is the OTC stuff. It doesn't give you all of them, but it gives you some of the big movers. This RDMF is up 42%. It went from trip 6s to 0011. I'm just clicking back and forth and seeing which ones I'm reading level 2s. So if I'm clicking through here real quick and you see me clicking through, I'm like, RMVA no, Badger no, DEWM yes. This thing ran 191% today. I think actually 200%. So this thing ran from 0012 all the way to 00135 or 0035, which was 200% here. This is a 5-minute candles. So you're looking at 5, 10, 15, 20, 25 minutes worth of hard run there. I mean, a million shares, you could have made yourself a pretty penny there. So, 00, let's say you caught it 0015 is $1,500 for a million shares. And the thing runs the first run or second run here to 2.5, you make $1,000, So, but that's how I'm quick on them. I'm watching on here, and then the scanner too. The other one that I have set up is this. This is NYSE, so there's RHE right there, and then the other one is I have the Nasdaq. So here's my Nasdaq one. So again, I'm clicking on here, looking at Nasdaq stuff. There's the NMRD. That was a nice run. We kept calling it several times. It kept hitting scanner. It started this morning down here. It started at like $5, $6, and the thing ran all the way up to it closed $12. So I'm looking at this. So I'm using these as scanners as well right now. This is percentage gain. I usually use a dollar gain, net change, stock gainers. You'll get different stuff though. So I click back and forth because I'm not trading a lot of these. I am trading Google, Caesars, a little bit, Jazz, but I'd rather have the percent gain. I want the bigger percent gains. The top percent gain here is 12. Largest percent gain here is higher, 172%. So I like the percent gainers. It doesn't give you all the big movers, all the big giant stocks.
Well, where are you getting your trade ticket from?
Trade ticket is right here. Is trade tickets is quote montage. So if you go tools and then market depth, it says quote montage here, but this is the market depth window. I trade everything from right here. This window right here is all, I trade everything right here.
Okay.
So if you go, it gives you news. It gives you the level 2 depth here. It gives you bid and ask. It's not live right now, obviously, so it's not showing it. And you can cancel your order from here. So if I put an order in right here, buy, and I buy it, and you'll see my thing up here. Let's say I'm trying to get filled at 12. I can cancel right here too. You just go cancel. And then, so I like it because you can cancel from here. And then your designation's auto. If you're doing pre-market, you're doing auto extended hours. It's 7 a.m. to 8 p.m. I try and turn this off during the day because they do charge you sometimes. I've been charged like extended hours pricing or something. Like they charge you like 0.5% or something crap. But I just try and get in the habit of putting extended hours on in the morning and then turn it off when the market opens. Limit price, they got limit market, or you got a stop. I use trail and stop dollar. Usually once in a while, like a 10-cent trailing stop. Most of my small cap scalps are all market. I market in, market out, and you'll see me sometimes go limit if the spreads are wide. If it's 1280 by 13, I'll usually type in limit 13, try and get filled higher. That's why I was telling you, hear me often say, guys, don't market out of this because you got a 40 cent wide spread. So if you're in 1,000 shares and you got 30 cents wide, they'll slip you 30 cents. So you think you're up 300, then you lose 300. And then the quantity, you can right click on the quantity. You can go settings, and I have right here 5 million. So you can change this max to 5 million. If you're trading pennies, I usually buy 5 million at a time. So if I'm buying 5 million, my max right here is 5 million. You could change that to 10 million if you want. But instead of sometimes typing this in, a lot of times if I'm doing 1 million, I type that in, I go buy, and I buy 1 million shares, but it will let you buy up to 5 million.
Man, that's great stuff. I appreciate it. Thank you so much.
This is fast too. I mean, buy and sell, and then short and cover. If you're shorting, short and cover. So, but you right click on quantity, and there's your settings. And then if you want to set speed keys up, if you guys are trading faster, here's your speed key setup. You can change it all right here. F1, 2, 3, whatever. And if the default is all 1,000. So when I'm running speed keys for scalping, it's all here, all the F functions, and you can change them if you want.
Excellent. Appreciate it. Thank you.
All right. All right. I can't, I'm going to back and read all the questions. Anybody got any other questions?
Hey, Brett, is the toss guy the eat, sleep, profit guy?
Yes, it is.
Okay.
Yeah, that's Jay. It's my buddy Jay.
And he's got the scanners that work for toss that pick up the volume?
Yeah, he's got about 3 or 4 really good videos on there about gappers and runners and stuff. And you watch those videos, it goes play by play exactly how to set it up.
Okay, great. Thanks.
I've just never used toss, but I know that he used to use it, and I used to trade with him, and he used to have it set up pretty good. I haven't heard from him in a long time. He fell off Facebook, and I don't even know if he's still alive, that guy. Okay, Brent, I'll let me do it now. It's what it is. It's going to be YouTube. And let me type it in. There is a lot of stuff in TOS too. TOS has, Thinkorswim has a library of this stuff, but on YouTube, this guy is really good. I know this guy real well. Jay is his name. Eat, Sleep, Profit here. He's got right here how to find scan stocks before they explode, how to find swing trades and gap ups, and then on runners for scans for news. So you can and build a watch list for scanners. And he's got like the longer ones. This 22-minute one, this 16-minute one, and 11-minute one is really good. He talks about exactly how to set this up. When you look at here, here's all the setups right there on the tool window, the toolbar. You can set it up for 50 cents to $1 or $5, or I set mine separate just so I know I have them categorized. The one I run is usually 50 cents to $5, and then 5 to 10, and then 10 to 20 during the day. So I know, kind of glancing at it, the corner of my eye, I know which one to look at. But it's Eat, Sleep, Profit Scanners. If you type in Eat, Sleep, Profit Scanners. Yeah, and I see you talking about multiple time frames. That's why I like this 5-minute in the middle, and then I trade over here on this. I use a 15 and the 15 and 30 on the right side. I like switching back and forth here, looking at stuff. In the morning when I run my scan, I run and I look at the daily. So I'll look at the daily. Like if you're looking at the NASDAQ or anything, I like doing that. I like looking at the daily here every morning, the 1 month daily, and I'll just look at levels on that. And then on the volume profile. Matt, you know how to set the after hours button, right? For the chart?
Yes, I figured that out right away, and then I take it back off whenever the market opens.
Yeah, I got a lot of that stuff. You can do the previous line close. Like there's the white line. Like if you click on the white, it'll be a white line. And then if you do chart trading, you can chart trade. And then the themes, if you want to trade this light, it changes it white. So that's good to know too. If you like the white chart better than the dark chart.
Oh, wow.
It just go to themes and change back over to dark or light. Themes, light. Pretty cool. Some people like white charts better. I personally don't. But.
So I mean, you start looking at, I make a trade off of 5-minute chart. I mean, my accounts went to shit this week. I just started trading again after quite a few years, and I'm a complete loser right now. So I look at a 5-minute chart. I place a trade. I look at a 15-minute chart. I never should have taken the trade.
Right.
So any advice on that?
If you're, it depends on your time frame. If you're scalping it, like if you're scalping this one, like we were looking at, like RHE, right? Here's RHE. If you take this trade in the morning, like we called this out this morning, right? It's hitting scanners, it's ripping. If you take this thing, you can, you got 5, 10, 15, 20. This thing went from $10 to $13.50. You moved $3.50 in 4 candles. If you're looking at that, if you want to stay in these trades longer, you can go down to, I use the HEIKIN ASHI setup here. When I'm looking at them, I use the HEIKIN ASHI. So what I use is that 246 crossover. So I got a real fast moving average on here, 2, 4, and a 6. And if you notice, they did not even touch. Okay, let me zoom in there. They did not even touch. You see that? The white's a 2, the yellow's the 4, and the blue's a 6. They not even touched till over here. So this if you trade this style, this will be this is a 10-minute candle. Even though it went up and it pulled back, it's a big move. but it will keep you in the trade longer if you trust this strategy and trade these fast moving averages. You would be getting out of this trade as soon as this turns hard and as soon as that turns red, which would be about $18. So it just depends on your time frame. If you're looking at something to get in for a swing, I base it off the daily on the inside bar break. But if you're looking at an intraday trade, you got to be able to handle, you don't want to get in here and then have this pull back and go against you and go here. But if you do get in here, if you go and look at this multiple time frame, you're looking at a 10-minute HEIKIN ASHI chart here. Again, you did have an inside bar here, but it broke up to the high side. The 2 did not touch the 4 and the 4 did not touch the 6. So I would recommend, for me, I would recommend using a fast moving average if you're day trading this. Like, let's say you want to stay in a trade 20, 30, 40 minutes. If you feel comfortable with that, then I would use a faster moving average. If you want a swing trade, look at the daily chart or the
Okay. I'm stuck on these 1 minute charts and it drive you absolutely nuts.
No, you can't do that, man. It will drive you. No, you can't use a 1 minute chart. I mean, you can use it on, the only time I use a 1 minute chart, I'll show you right here. The only time, let me turn this after hours off. The only time I use a 1 minute chart is if we're trading this and I see a lot of selling coming in. If you see this, you could see this volume pick up here, right? And then you see all the red. Watch when I go to a 5. Look at the difference. See, there's more green than red. Okay.
Yeah.
You have your red here, and you had a pullback. So this will drive you nuts. You'll be like long, and then you'll be up 1,000. You know, if you took this trade at, let's say, 1050, and you're up at 1350, you're up a couple grand, and this thing turns on you, pulls down all the way $1.50 here down to $12. Then you're back down. You're like, oh my God, but you're seeing this red. So what I do, I like to watch, I'd like to watch this over here, but if I'm scalping this, which you know I'm more of a scalper than anything, I'm not getting shaken out there. We got halted, it looks like, and we pulled up to here. So you got a big push here all the way to, on that green bar, you got to push to 1267. That's the only time I'm looking at the 1 minute is to see what's buying and selling. So it shows me this buying and selling better. But you had momentum coming out of here. So, you know, it did move up another 50, 80 cents here, not maybe $1, but you had momentum coming out. I like that momentum shift. Now that's a 1 minute. Now let's look at the 5. So here's the 5. You did have some selling here. If you could stomach this pullback, this was $9.55. This went all the way to $19, $20. So I wouldn't use, I like to look at that 1 minute to see if it's all just selling. Let me look at the other one. And let's look at this. See, this is all buying. I would stay in this. I would stay in this until here. That's a lot of selling. That would shake me out. But again, look at how clean this chart's clean to here, and then it falls off. So if you're trading this, you would have been out here, first red candle. So if you're trading, you'd be out here. If you go long again, you got an inside bar break to the upside here, 246 crossover. You got no wick. You got no wicks, no wicks, no wicks, no wicks. You get a really big push from 675 all the way to $10. So if you're trading this style, you go long here. You got pretty much a breakout from, it didn't cross, but you pretty much got a breakout right here about, let's say, call it 675. And then your next candle open with no wick. That's what I like. I like no wicks on the HEIKIN ASHI, and you get a really nice smooth move, and you're out. When you either go inside and you get out on the inside bar, or you get out on the crossover. So this will take you down another $1. I personally am out faster than that, but I trade off the 5. Where is? It almost, you know, I don't really use it, but it does work on the pennies too. There's the penny. There's that DWM. Look at that move there. out of the gate, you rip, and then you get an inside bar. You got an inside 10-minute, and it goes down, turns red. Next candle's red. You're out right here, 28. But this thing ran to 35. So if you got 1 million shares, that's another $1,000. I like to sell the big pushes because there's always reverts back to the mean. So this thing has a big push, and then it reverts back, comes back through VWAP. Especially, I'd be out under VWAP.
Yeah, I think at 1 minute's kicked my ass. I really do think it. Like,
Yeah, I would get away from it. The only reason I go there is to look at the buying and selling on something. You'll see me toggle back and forth on a momentum play all the time. I'll go back and forth to look at what's going on. It just shows you if there's more selling than buying to me.
Okay, thanks.
MRD RHE. All right. Yes, they are. They're exponential. And David, they work better than the SMA for some reason with the HEIKIN ASHI. This, to me, the simple, I tried the, it's different if you add the EMAs on the regular chart, you'll get a different reading. You can put them side by side, but I like putting the, I don't like the SMAs on the HEIKIN ASHI. You know, these are divided by two candles. So a daily chart's divided by 2 days. It's an average. If you look right here, let's look at a regular stock. Look at this is, now look, you see right here is, see right here is 1106. Right here is 1106. Look at this, 1121. See the difference? These are divided by 2 bars. So this is not going to be the same price as this. So this closed, it says 1280. It's not showing after hours. If I go to after hours, let's see. 1280. See, it says 1280. And then this one, if I change to after hours, it says 1295. See, it says 1280 here on the montage, on the quote. It's totally different because it's divided into 2 bars. So the longer time frame you have, the smoother the. If I go to like this, you guys, if I tell you guys, take this trade, let's look at Tesla. If I tell you guys take this trade, I hate wicks. So if I tell you to take this trade, this one isn't that clean. It's not that clean of a trade, even though it did go down. What you got is wick. You don't have a wick here. You got a little wick here. You got wicks here, and you got wicks here. What I like is trading a cleaner setup. Let's look at NVIDIA. NVIDIA had a clean up move, and then you went inside, and then you went down. So this is a clean move with no wicks. But you see how smooth it is. The longer time frame you go out. So if I say don't get in the trade on a 246 crossover, this went long out of the gate, and then get out at a 2-4 crossover or the first inside bar or the first red candle, you'd be getting out here at 580, 697. And the reason I like the fast ones is because they are fast. They're not laggy. They're not laggy like a MACD or an RSI. So Google's not real clean. It had a decent move. It's not a clean chart. Square was kind of clean. We said Square in the morning. If you went back and listened, we talked about Square in the pre-market. This one had an inside bar break to the upside. So, and then it had an inside down. So, you know, again, you get a decent move here. But I want to trade the clean charts. That one's not that clean. Dow's not that clean. SPY had a decent move up. Had an inside wedge here and then a move up. So you could have traded this in. You had an inside 30 here and another inside 30, which equals, you know, if you go to a 15, it chops you out. See how you get chopped out on a 15? You crossed here, you would have got scalped out of here. But look at the longer time frame. Look at a 60. It's clean. You get an inside 60 break to the upside. And then the 30 is the same thing. Inside 30, double inside 30, and a break to the upside.
Oh man, what a difference.
Yeah, that's what I'm saying. Multiple time frames are a huge difference. So you want to look at Facebook. Facebook to the downside look good. Basically, you know, when I'm looking at this, you got a, here's your basically a wedge. I'm looking at this wedge. I love these breaks. All it means is tighter, tighter, tighter. You get consolidation going sideways, and then you get a break right here. Get your 246 crossover to downside, entry 318, goes all the way down to 314 here. So that's, I like the no wicks. And then all you do, if you haven't watched me do this before, your stop, if you short here, your stop is 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 here. You could either take profits or take some off and let this ride the next day. But I like a big thrust down, and I try and catch this move here. But there's no reason to get out of this trade on a 30-minute chart. Once the day gets evolved here, if you can get a wedge like that, and you get into 1, 2, 3, 4, 5, 6 candles on 6 30-minute candles, if you can let this build out, that's why sometimes we say like let this shake out and see where we're going. And then sometimes it just takes off. This took off to the downside, but some setups are a lot cleaner than others, and I like to trade the cleaner setups. Look at Facebook yesterday. Look how clean this was yesterday. Out of the gate, you had an inside breakdown. Look how smooth that was. And then you start to go sideways. This is when the market looks to reverse. You got an inside bar here. Trade this 15 or a 30-minute. You got an inside bar. You got an inside right here, but you open with no wick. You stay short. No wick, stay short. You got an inside 30, and you're flattening out. This means possible reversal. So if you catch this whole move, your trade's right here. You're out here, somewhere in this area. That makes sense.
Yeah, it's good stuff. Sure.
But I like, again, the key to this is a fast moving average. That's the key to it. I've kind of perfected that over the last couple of years that I've been trading it. The whole key is the fast moving average.
So you said a 246 on a 15-minute chart and a 30-minute chart could show you two totally different things.
Yeah. Okay. So this is, let's look at the difference for today. Here's a 30-minute chart of the HEIKIN ASHI on Facebook. Look at the 15 on here. That's today. One day today. Okay. You see this right here? See how choppy this is? Chop, 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 chop.
Wow.
Okay. Look how clean that is. This side by side. You got a green candle here. It might have shaken you out. Longer time frame dominates. Look how clean it is.
I never would have thought that, man.
Look, can you trade this chart? Really? Look at this. This is a 30-minute. This is a 30-minute. Look at the difference.
Yeah.
Big difference, right?
Yeah.
Jason, I've been trading. I started trading in 2009, and I did exactly what Nick talks about. I know Nick talks about he traded for a long time and he paper traded for a long time. I just went live with money right away, and I made a lot of money real fast, and it sucked because in 4 months the real estate market crashed, and there was no work here, so I started trading. I took some money that I had left over, and I had a ton of houses, and I didn't have any income, any work. So I started trading at 25 grand. I turned it into 174,000, 176,000 in like 4 months, trading mainly biotechs. And over the next 2 years, I lost it all. And then I went to pennies. I started trading pennies for years. I traded pennies, a lot of pennies. I made a lot of money in pennies. I did a couple $200,000, $300,000 hits. I had one that was like 212,000. I had one that was like 1.25, and one was like 90 in like 3-4 year period. But and I went on to lose a lot of money learning. Then I started trading options in like 2014, 2015, and I lost a lot of money trading options. But I followed a lot of guys, had a few different mentors. I followed their strategy. This strategy to me works the best. If you're patient and you wait for the right setup, this works. We talked about the Qs. yesterday. If you're patient, you wait for these type of moves, you can make a lot of money. And then to the upside too, not only the downside, but the upside. If you're looking at this chart, you know, you guys are catching this on your, you know, Nick called, I listened to you guys yesterday talk, and you remember, Jason, Nick walked everybody through this long on the SPY and the Qs yesterday at close, right? So here was the turn. What I like is the consolidation. I like the consolidation, okay? So here's the move yesterday. Look at this move. I just showed Matt. You get this big move down, right? Super clean move down, and then you go inside. You go inside again. You're almost inside. When the body gets really small, I call it another inside. You got basically a wedge here, but you are flattening out. Then you get a green candle and a green candle. You get your 246 crossover right here. 2-4 crossover, 246 right here. So you could have entered here, front ran it around 327.60 or 328. And then look where you go, 333. So you could have front run this, but Nick walked everybody through this yesterday. I listened to you guys and I was studying all these things. But what I trade is an inside bar. So if I'm trading the inside bars, here's my inside bar and here's my crossover. Your selling's done, and then you get your move. And Nick was talking here. You go inside again, you get a move. I like this right here. I like this consolidation. I watch these consolidate, consolidate, consolidate. Then we break out. Now it turns into support, and it rips, you know. So you did have a move here. It did pull back. It bounced off this support and it ripped. I just trained my eye to see that. If you go down lower, you really can't see it too well on the regular candle chart. You see it a little bit, but that was a really nice move. You also got higher lows, higher lows, higher lows. You know, you got higher lows, higher lows, higher lows, and you explode over the 8 and the 21 and then through the VWAP. But I don't know. It's just I like this clean setup here. The SPY was the same thing. I think Desiree, if she's in here, Desiree took this trade. And Nick walked you guys through this yesterday. We consolidated what it is, just different levels. I think I talked to Steve about this. We're looking at lower lows, and then higher lows, you know. You get this here. What I was looking at yesterday was right. Shut up in a minute, so you guys aren't here all night. But what I looked at yesterday was the ticks, and the way the ticks were set up yesterday. We had one pierce down here, and then we had a higher at 11:30. Right here, I was looking at this at 11:15. Here's 11:45. We had a pierce to the low on the ticks yesterday, and we pierced here. But the volume profile, look how thin the profile got. So I'm looking at volume profile. I'm looking at the 821, and I'm looking at this right here. There's my line drawn from yesterday. That was my line in the sand from yesterday's low right there. I had that drawn yesterday. I did not just draw this on this. This was my line in the sand. You had a rip down on this wick. The wick is rejection and indecision. And look how thin the profile got. Your profile gets thin. You get back up here into value. So it's just, you know, kind of elementary to me. You got this consolidation here, and then you bounce up over it. This X is support. And then you get this higher. You get a higher low here, higher low, more support, and then you get a rip. So it consolidated. It was pretty hard to get through it. But once we were over the 8, you got it. We're here. We pierced through it, but we closed green, pierced through it, closed green. So, that, you know, you got to be it's all about being patient, seeing that right setup. If you look at today, it was tough today. You know, some people got ate up today.
Do you consider the wick part of the inside bar, or is it mostly the body?
Yes, I do consider it the inside part of the inside bar. like for instance, on the down thing, here's the inside bar to the downside. Here's my trade right here. Here, see this, the box right here? This box, we got kind of a double top on the, I went over this in chat yesterday or today, yesterday, how we got kind of a double high there, a double top, and we were talking about momentum. So I went over this yesterday, momentum. See how we got a high here and then a higher high and a higher high? Look at momentum shift. Momentum shift is downside. So longer time frame, this is a 1 month chart. We have momentum shift to the downside. We have a negative divergence here. But look at, we have a higher high here and a higher high here, but momentum's coming out. So this was bound to happen. This is a perfect setup. We got an inside bar here and a break to the downside. And we had continuation. You could have swung this and done really well. But, and then these were both through the 8 and the 21 as well. You got a crossover here. You know, this is lagging. This 8 and 21 is lagging. Look out. You had a big move down and a huge move down. And look at it, didn't cross till the next day. So I mean about indicators and stuff are laggy. This 8 and 21 is laggy. So it's even laggy on the daily. So you get a move down today, you're actually got an inside bar right here today. So you got an inside bar. You got an inside bar from here to here is your wick. So we have an inside on the Qs. We went inside today. I go sometimes look out at the weekly. The weekly works real good for a week and looking out forward. If you have an inside week and you break up, we usually have a huge rally. Or if you have an inside week down, you have a huge down day or a huge down few days. It works really good on the longer time frame. It works really good. But this was a perfect setup to the downside. And then we're inside today. So this is choppy today, you know. But you see the momentum. What I was going to show you was, let me finish on this note here. What I'm talking about on the momentum, you see that high there? You'll see it's not much higher than here, right? And not much higher than here. Now look at the SPY. When I say the SPY stronger, look at our SPY. So we had here, look how much stronger the SPY was. We were up here, 3-4 days, and then we pierced way up here 5 days, and then another day here. So I mean, we do have a momentum shift to the downside right here. We got negative divergence, and we have a higher high, a higher high, a higher high, and a higher high. 4 higher highs here. On the NASDAQ, you only had 1 or 2. Here you got 1, 2, 3, 4, 5, 6 higher highs than here. Actually, just 5 because you count the last highest one. But this was higher than the Qs, but we do have a momentum shift. We didn't have an inside day. We did have kind of an inside day here. We went long here. We got kind of faked out. But you know, again, I'm watching volume profile, and then on the volume profile, I was worried more about the Qs. The Qs bothered me here. You know, you get real thin. When you get thin, you see how fast it drops. You see that big move down? It's because the volume profile is thin there. If you look at a 3 month, look how thin that thin got thin, and you could go all the way almost to the gap. So that's why I said yesterday on chat, I'm really calling for like 320 on the Qs. I was saying, man, I hope we don't go all the way down here. That'd be a huge day down, but we ripped down here, man. This was a 10-point move, 10 points on the Qs. You know, 334, 35 all the way to 325-ish. And then I think we could still get down if we sold off tomorrow down into here, which would suck, but that would be good support where we would bounce.
Never would have seen those highs if you wasn't looking at the daily chart.
No, you never would have seen them. That's what I'm getting at. And then, you know, I was thinking we'd break out. I had this drawn from the last high back here. You know, and then this works too. This channel here, we talked about this channel here. We had when we took this trade here, we were kind of, this wasn't an inside bar. We had a real nice rip on the 8 and the 21. We had a huge move here. Really nice move here on the Qs. Now, if you look at this was 330, March 30th. Look at the SPY. Look at the difference. We had 330. This had a minor pullback, but we were right here on 330. We had an inside bar break right here. We didn't have that big long wedge, that big long down wedge like this, like I had on like this. That's what the Qs looked like. We didn't have that on the SPY. we didn't have that huge move down, and then we had an inside bar break to the upside. So our trade was right here, inside bar break to the high, 395.50. We had a huge move for a week here. So if you're swing trading, these are the setups you look for, and you do multi-lot and scale out. If you go back over and look at a 60-minute or a daily, if you went to a daily, look at the daily on this. Here's your break right here. Look how clean that is, and that's a 1 month chart. So you got, even though you got ups and downs, your entry is like 390 here. You're all the way to 417. You don't have a red day on this chart.
Wow.
On the daily. The HEIKIN ASHI is really powerful on the daily. You do have an inside day. You get another inside day, but you don't have a red candle. So this will keep you in a trade longer looking at this chart setup. The whole thing is, my problem sometimes with trading is my patience. I don't have patience for this. If I did, you know, I'd make more money. I don't have patience for this to sit here and wait this out. You know, I'm just not that type of trader. I see stuff ripping, and I'm like a quick nickel beats a slow dime every time, you know. So I'm in and out. But I see so many opportunities in the indices, and then just like the 20 on my watch list, I like to trade, and then all the small caps running. I like to be in and out, click, 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 click. You know, if I can make 500 up to 5,000, 10,000 a day scalping, I do really good at that. But this right here, I have yet to catch a move like this with a monthly option. Right here's the move. I have yet to catch this because I don't have patience.
I want to piggyback off that real quick. First off, I called in my absence. I called GoToMeeting. Apparently, there's a known issue that admins' profiles are being switched to non-recording. So that was fixed. It was literally just turning on a button in admin settings. The guy showed me where it was. So going forward tomorrow, we're good. Cool. Second thing is, you mentioned, you know, you don't have the patience. And reading one of the questions, David, is for, and I can't speak for anybody else, but obviously I can speak for myself when it comes to my trading journey. Him saying that and reading your question about, you know, trying to mix and match different stuff, you have to match your personality. You know, like right. I joke around, I have ADD. I'm the same way to an extent. My main thing is I'm not as quick as him as far as getting in and out, because I don't, you know, on a 1 minute chart. Like I said, funny enough, a lot of the stuff, some of these questions I kind of went over today. Not that they were direct questions, just sometimes I ramble on about some things that I find important, and some of the names that are asking these questions, I know you guys can't be in during the day. So this is why we dedicate this time tonight for you guys, is to be able to pick up for this. Because I know, especially some of you guys, you know, message me, you work 8, 9, 10 hour shifts, sometimes more. The last thing you want to do after working all day from, we'll just say, you know, 7 in the morning till 6, 7 o'clock at night, is to watch 7 hours of recordings. So I get that. So my main thing is to say, you know, that's why we have this open Q&A, or you guys know you have a direct communication to us on Facebook, Slack, and stuff, which I don't think there's another service that has direct communications. Trust me, I've been to tons. You know, it's almost like the person's like Tony Stark and you're in the crowd. Mr. Stark, can I get your autograph, Mr. Stark? Like, you never have direct communications to these people. And some of the people in here know we've had random conversations at like 11 o'clock at night. I'm not telling you guys to start blowing up my messenger at 11 o'clock at night, but if you guys message me and I got 2 seconds or whatever, I'm brushing my teeth and I see a message pop up, I'll take the time to respond. You're not going to see that anywhere. I look at it as I work 24/7 for you guys. So not to get off too far off the rails, what I'm trying to get at is finding your personality. You know, David was talking about different strategies. I'm trying to learn this, everyone goes through the same thing, because we naturally assume the more we know, the more knowledge we have, the better we will do. And I don't think it's necessarily knowledge. I think it's experience. Sometimes they go hand in hand, and then sometimes we kind of force ourselves, which is good. You want to be hungry. You want to have the initiative to learn. But sometimes you guys will hear me say, man, I don't care. Or, hey, what's your prep in the morning? Okay, you know, I eat a hearty breakfast and I do 55 push-ups, and then I climb Mount Shumami and I meditate and float for 45. No, I literally roll out of bed, cook breakfast for my son, drop him off at daycare, sometimes get Starbucks. I come up here at 9:20 in the morning and I turn on my computer. That's my setup. That's what I do. What? No pre-market? You don't check the whoop-de-wop-de calendar or cross-reference what Twitter said? No. Because I'm at a point that I want to be a clean slate. I want to let the market tell me what it's going to do. So I come in with a complete unbiased for the day. As far as looking at, a trend and stuff like that, yeah, we'll look at that stuff, but the less information I take in, the better. And I'm at that point now. So I know it's complete opposite. It's almost like picture, talking about the squeeze and stuff, like an hourglass. I'll use that reference. It's wide and then it gets smaller in the middle and then it gets wide again. You want to get to that point where you don't need to feel like you need to take in, so much. What is it, like eat like a bird and defecate like a defecate as an elephant? Like, you don't want to get to that point where you want to have to filter that knowledge, but at the same time, you don't want to have to, I don't want to say ramble, but read that book. Sometimes you'll read a trading book and you won't get one thing from it, but that's one less book that you have to read, or you know what I mean? So it's hard to find your way. And I think a lot of times people join sites and they read a book or they watch a YouTube video or they do something because they're looking for something. Sometimes people don't even know what they're looking for specifically. They're looking for the aha moments. And sometimes those happen quick, and then sometimes they take years. So for me, I want to say only in the last maybe 2 years. And it's one of those things. When I say I've been trading about 11 years, well, that was when I first started getting into the idea of learning about trading and investing and reading some of, my first book I ever bought was, Day Trading for Dummies, that little yellow book or whatever. I've had that thing for probably 10 years now. I still have it just kind of as a, souvenir, I guess, and be like, yo, I read this whole book and I didn't learn a single thing, but just to see where I've come. But you don't know exactly. And I know people want to be like, tell me, how do I become a profitable trader? Tell me how I become those 20-second YouTube ads and stuff like that. But honestly, it's a journey of, you got to climb the mountain by yourself. Like, I'll give you the backpack and I'll give you the tools, but it's impossible for us to copy and paste what we do, because no two traders are just how people say there's no two people that are identical. Certain setups, certain styles, certain things might be the same, but you're not going to look at the chart the same way. That's that mix of that art and that science I talk about sometimes. So best advice I can do is find what has worked for you and what hasn't. Now, you had to have had some successful trades. Just the rule of numbers, whether it was luck, whether it was ever, there's no way that somebody has taken 100 trades and lost 100 times. If that's the case, then maybe trading isn't for you, because I find that almost impossible. Sometimes you'll have a lot of winners, sometimes you have a lot of losers, but there should be some type of, bell curve. When I talk about market profile, somewhere in the middle, there should be somewhere in the middle, and it's a matter of finding certain things and also giving yourself the time to see how it works. If you literally download my internal screen, if you use Thinkorswim, look at it for a day and say, okay, I think we're getting higher, because you're reading it a certain way and it doesn't work. Oh, this doesn't work for me. Well, you didn't even give it a chance. Like, at least give it a week, 2 weeks, a month. You can't rush a lot of this stuff. So obviously everything that I try to teach or go over or I share is, little bits and pieces here and there. Oh, I learned that 7 years ago. Oh, I learned that 2 weeks ago. Oh, I started using this 5 months ago. It's literally you're building your own, foundation up with your own little, you guys know I like Lego. So Lego pieces, and every couple months, maybe you get 5 pieces in 1 week, and maybe 6 months you only get 2 pieces, whatever the case may be. You slowly build something that you want to see. And it doesn't happen overnight. Some people will trade for 10 years and still feel that they don't know as much, or sometimes you feel lost. It's like, I thought I had it and then I lost half of my account. I call those inflection moments, and in points in time, like it's a fork in the road. You're either going to take the left and learn discipline and not ever do that again and learn about risk management and stuff, or you're going to go right and you're going to blow your account and end up being in the 95% of people that fail at this. So the choice is yours. It's always a choice when it comes to trading. No one puts a gun to your head and says, go long Apple, short the SPY. These are all decisions that we need to make for ourselves, and it's up to us to find what works for us. I know most people don't want that. They want to be, on the teat of trading and, try to be safe and just have, some type of tour guide that's 100% going to do everything for you. Like I said, I'll be the tour guide, but if a bear comes out of the woods, or a bull, depending on what side you're on, I might be able to help you a little bit, but there's only so much. I can't control your entire account. And sometimes people will copy my trades, and I'll be like, all right, cool, I'm up 6 figures for the year so far. And they're like, well, I've lost 5 trades. How is that possible? Well, we're not looking at the same thing. You can't just copy and paste my trades. You have to make it your own. So the best advice I can give for you, David, is, don't get frustrated. Just take little bits and pieces and find what works for you. My internal screen has like 15 or 18 things on it. Maybe only 3 or 4 are relevant for you. Maybe you've watched my market profile video and hear me talking about it. Now, as I was on the phone with them, I overheard Brett talking about that setup. I know Desiree made like 80% on calls that day, and I think Jason scalped and some other people did really well. And I didn't specify, guys, go long SPY, get out in 13 minutes and 14 seconds. I was just giving a play-by-play of what I saw in the markets and what I thought could happen. It's basically giving you the ability, I don't want to say to see in time, but you almost have to forecast or predict where you think the market's going to go. Now, that is from experience, that's screen time. I know some of you guys have been really helpful, and I appreciate that. That's what's so great about this group is, it's not just me and Brett and Ed trying to help you guys, it's each other. Have you tried this? What about this? What have you learned? So Sean and Jason, some of the other guys, I appreciate you guys doing that, because one team, one dream when it comes to all this stuff. But it's important to mix and match different things. Like I said, my style as of today, I call it that top-down approach. I didn't just start with that. It has literally taken me 11 years of adding and removing and plus and minusing. Perfect example. Once again, going back to Brett's statement, I can't sit through this. Okay, so then he is not somebody that can swing trade for a month. I'm the same way. I might be able to do a week, maybe a few days. I have a little more patience than Brett, but not to the point that, and that's what's frustrating sometimes. You guys will know, I'll say, okay, guys, I could see this doubling in a couple months. And then what happens a month later? The stock doubles. Well, you called it. Why do you? Yeah, because I think and I can see something and I can visualize where the chart with fundamentals or this or the sector or the administration or that, and I can spit out a level or an idea, doesn't mean I'm going to hold to that, because that's my bias. Then that is what I think is going to happen in the longer term. So it's good to almost predict, in a sense, where you think certain stocks or certain prices or indexes or whatever the case may be is going to go. And that is an edge that you slowly learn in time, but you don't want to be anchored to it. You don't want to go down with the ship in your bias and say, I have to be right. I think this is the best stock ever and blah, blah, blah. Your strong convictions, you want to hold them loosely to a degree, because if you're wrong, you could be right. You could have the best stock and it could be the best thing ever. But if the market disagrees with you, you're one person. Buy 1,000 shares of a company and the float's, I don't know, 1 billion. You're not even a drop of water in an endless ocean. So your opinion ultimately doesn't matter. Doesn't matter what lines you drew on a chart. Doesn't matter what your whoopty-whoppty indicator says. You're wrong. And sometimes the quicker you realize you're wrong, that is an edge too. And that's what will get you over that other mental hurdle. You have to be so quick. Sometimes you guys will see me. All right, guys, we're going to get into the daily squeeze. I like this one. Look, perfect example, Amazon. What did I say about Amazon? Okay, if, there was rumor about that split, I said they'd probably have record earnings. If they have a split, if they have record earnings, but good guidance, whatever the case may be, I would not be shocked if Amazon hits 4,000 by, sometime in end of May or early June or whatever the case may be, or at least start climbing that way. So I came out with this trade idea. What did I do? 2 or 3 days later, I got out of 2 of the 3 of them, and then right before the report, I changed my mind, and you said, you know what I said? Amazon's come up about $500 in a month, just because some random guy on CNBC says there's going to be a split. That is not a reason for me to take this trade. So you know what I did? I took my profits. I got out of the trade. I don't know if Brett wants to. I don't want to mess up this recording because we're not doing the traditional one, but he can pull up Amazon if anybody knows. Amazon's down like $300. It did pop after hours, and if you had shares and sold at the highs, great. But if not, if you had calls, you got royally screwed. If I was still in those 4,000 after the IV crush and after it dropping 300, 400 points, my calls would be worth, instead of the premium on the last one of being up about $800, $900, it'd be worth maybe $100, if that. So notice how I had a plan. I outlined the reason for the plan, and right before we get to it, I slam on the brakes. Is that going to be right 100% of the time? No. Sometimes the news could have came out and it could have gone to 4,000, but I was comfortable changing my plan and the reasoning behind it, because I stepped back and said, you know what? I could see that happening, but I don't want to take the chance. I'm happy with this too. At one point, and you don't know, like that trade was up over $1,000 after that news came out, because we caught that like $60, $70 move in Amazon, and I was up like $1,200, $1,300. Ultimately, from those 3, I made about $400, but I made money versus having a max loss on 3 contracts. So I went from holding 3 contracts through earnings, shooting for the moon to 4,000, to legging out of it and then getting out right before the report. Was that the right call? Yes. It's always going to be hindsight. Because if Amazon's at 3,900 right now, well, you should have held it. You know what I mean? But at the same time, I was comfortable doing a 180 from my plan and in a matter of a day or two changing how I thought of the play. Some people would rather go down with the ship. And those are the people that fail at trading. So my best advice, plug and play. Do not expect this to happen overnight. It's literally years. And that's why most people either, like I said, we'll have people join. Oh, cool. My friend doubled his account. Let me join. I want to double whatever my money is. Oh, wait, I actually lost money. Oh, that's not cool. Yeah, this isn't for me. Let me go to the next service. And you know, that rotation of, once again, searching for that holy grail. Instead of putting in the time like you guys are tonight to try to learn, you'd rather have somebody try to, you know, not everybody here, I'm just saying specifically, have people try to spoon feed them trades. And those trades are going to make money, and I'm going to make money and live happily ever after the end. And then they slowly find out that even if sometimes if they copy the trades almost to the T, they have a losing record or break even, and the other person's, you know, in a stadium cheering, oh yeah, they're killing it, woo, they're up $1 million. Why is that? And those are the questions you have to ask yourself, and most people don't want to ask. They're like, nah, I can't learn from this person. Next. And then they spend 15 years trying to trade. They think they're learning how to trade because they're trying to find the right person or the right information or the right indicator, and they wasted 10, 15 years rather than just trying to look inside of them. Once again, I always talk about trading as being brain surgery from the inside out. And most people aren't willing to eliminate their bias. They don't want to eliminate their ego. My opinion doesn't mean crap. You know, oh, my political party, oh, my religion, that doesn't mean anything. Who cares? Most people aren't comfortable saying that. If we're having an argument about something, yeah, you're right, I probably don't know. Or if I'm wrong, I'll be the first to say, yeah, I don't know. I'm not going to talk about something I don't know about. 99% of people aren't willing to do that because of their ego. And that's why they fail at trading as well. So, like I said, watch a lot of the videos. Watch my internal video. Watch the squeeze video. Watch the market profile. Maybe 1 or 3 or 5 of those little videos, especially since you work so much, will click. It only takes one, you know, you can learn more sometimes in 2 hours than you learned in 5 years. And you feel kind of stupid sometimes. Like somebody watched a newer member from a couple weeks ago watch my risk management and has had success where they don't have to check their phone every 10 minutes because they're only risking 2 or 3% of their account. And they're doing better. You know, their P&L, they didn't go from a $200 account to $1 million account, but they're doing better. Their losses are smaller and their gains are higher. And all that they had to do was watch a 2-hour video. You know, I can share. Somebody had a $50,000 account when we were doing Zoom for free, and I went on a tangent for about an hour about risk management and something else. A guy messaged me and screenshot and made $1.2 million off a couple of our plays. So it happens. Sometimes it's an aha moment. It could be 5 minutes into your trading career or 10 years. So it's a hurry up and wait mode when it comes to trading. The other thing is somebody asked about, top 5 picks or whatever. I'm not going to give a top 5. I'm going to challenge you to think of what is going to be relevant in 10 years. And I'm going to use myself. And funny enough, I think we spoke about this today, is 10 years ago, 9 years ago, what did I do? Try to think of stuff that was going to be big in a decade. And for me, that was going to be, anything chip-based, anything EV-based, anything that was big, not now, that most people didn't know about, that I figured that would be the future. And if I gave you a top 5 list of my, top 5 things 10 years ago, it was Tesla at $22 a share pre-split. It was AMD at $2 a share. It was Nvidia at $11 a share, and some other little odds and ends in between that. And now we can cross-reference where those stocks are today. What is Nvidia at, like $600? AMD's at $80, $90. Tesla, pre-split, that price, what is it, $4,000, $3,800? So that type of mindset is what I focus on, and I'm doing that again. So a lot of those quote-unquote predictions were true, but granted, a lot of stocks are up higher than they were 10 years ago, 9 years ago. But to that accelerated growth, those are some of the biggest returns. Apple's, I'm sure, up. Amazon's up, a good amount from back then. I mean, Amazon, I think, was like a $100 stock, $180 stock when I first started dabbling in trading. And now it's at what? Even after that drop, it's still what, $3,200, $3,300? So a lot of these stocks are up, and most stocks do end up going up over time. But to see those crazy types of, Dogecoin returns, you have to think in the future. That's why I'm such a big fan of Kathy Wood. I would recommend looking at ARK Invest. So they share all their stuff. The way she views things is the same way I view things. As far as what's not, who, everyone's heard of Apple. Everyone knows about Amazon. Everybody now knows about NVIDIA and AMD. What are the next ones? So you guys know I'm big on Lucid. I'm not saying that that's going to be the Tesla killer or the biggest EV company or whatever the case may be, but it doesn't need to. If it owned 10% of the EV market, it would still be a multi-billion-dollar company. I like the car, I like the CEO, I like the management team, and I like that Saudi has endless pockets that is funding this, and they're the majority stakeholder. And at 19, 20 bucks a share, to me, if you put that in an account and look at it in 10 years, I would be incredibly shocked if you're not up a minimum a few hundred percent. Minimum few hundred percent. So granted, we could have some options trades that could be up a couple 100% in a matter of 30 minutes. But if you're looking for that long term, you need to think of what's important, 10 years from now. One of my things are like space related things. Obviously, Starlink's not publicly traded, but there is, what is it, IRDM, Erodium, like satellite based stuff. Anything 3D. I'm big in the 3D printing and stuff like that. DM, I have shares in that. A1 is good. EV charging stations. I'm glad this is recorded. You guys can watch again in 5 years and see if I was right or wrong, because there's going to be more EV stations in cities, and right down the road from you there'll be EV charging stations, and I guarantee at least 25% of the people in this room will have an EV based car in the next 5 to 10 years. So that is the future. So I'm focusing on that type of stuff. This time around, I actually have the money and I'm wanting to invest and not touch it. It's not easy because I am a swing to active trader, day trader / sometimes swing depending on the trade idea. But at the same time, I'm pretty damn good at picking stuff long term. And I'm sick of not seeing through, just how Brett was looking at a daily chart and saying, oh, look at this massive move. We might have called it or thought about it, but we don't see the end, It's like, instead of going in the Tour de France or whatever, we're trying to be like Fast and the Furious. I live my life 1/4 mile at a time kind of thing. And it's fine. That's finding your niche and finding what works for you. And you do that through trial and error. Maybe Brett did a lot of swing trading and lost a lot of money. He was up, 50%. He held another week and it was max loss. Well, I should have taken that 50%. Or he found that, being in and out, getting that quick money is more consistent than swinging for the fences. So it's matter. Some of you guys are better at holding stuff. I mean, we have like Irene, and we have, I'm trying to think who else is like really good at holding. I know we got a lot of J people, but Justin and Josh and this Evelyn, they'll be like, oh, is anybody still in this? And it was like, well, I haven't looked at that in 3 months. And then sure enough, we're talking about it at $3 and it's at 30. It's like, what the hell? So it happens all the time in here. But just because our trading styles and our personalities are, let's go, doesn't mean that you're not. And you could either be very similar to us, or you could take that information and hold it for 6 months to a year. Some of you guys, I think it was Justin, ended up doing leaps in Lucid. He likes it. He has the same idea. He likes what I'm talking about with Lucid, or he did his own research or whatever. It's like, you know what? Let me go out a couple years. I'm not going to buy some shares and buy some leaps. And worst case scenario, they expire worthless, or the stock's at $100 and I can either sell them for a massive profit or get assigned the shares. So it's a win-win. So there's a million ways to, it's in the word options. There's tons of ways to do that. Once again, David, going back to your question or not really a question, but what you were talking about is I wanted to learn spreads, because in my head, if I'm going to learn options, I want to learn all the options. I want to know what a butterfly is. I want to know what, an iron condor is. And at that time, 5-6 years ago, I was dedicated to learning all that stuff, and I knew it fairly well. I made it to a point that I was only doing spreads and, locking up $10,000 in margin to have an 86% chance of making $400 over the next 2 months wasn't sexy to me. That wasn't fun. It's better odds and I have a better chance of making money. But that's like, do you want to actively trade, or do you want to lock away 10,000 grand and make 3% of that in 10 years? Some people do that. Some people do CDs or buy certain things and know that they're not going to see a return in 5, 10, 15 years, but that's not me. So what did I do? I found out that I'm more of a directional trader. I either want to be right or I want to be wrong. And I don't care which one happens first. So I'll take a trade. It's either the weeklies, I buy it, like DraftKings. I'm expecting DraftKings to, do well in the earnings and stuff like that. This market's been funky. Yeah, I'm up a little bit. I'm down a little bit right now. I think I'm down 30% on those calls. I didn't really risk too much, but that's for this week. That's one trade. Okay, the next trade, I'm going out to June or this one's cheap, and I could see this one going, and I'm going out to July, and oh, my gold trade, gold's a really hard one to trade, but overall, trending wise, I think it potentially will go up, going out to September. So there's a million ways of trading it, but it's still ultimately directional stuff. Ed likes to do spreads. That's his thing, and that's good because he brings that to the table. That's a different way. And I know Stephanie and Desiree and Lauren and some other people have been learning about spreads, and maybe that's their aha. You know what I mean? Like I said, it's finding what works for you, and it's all through trial and error. So trying to mix two of those questions, like I said, just as far as take one thing from tonight, take one thing from one of the other webinars. The other thing is when he was talking about it, I think it was yesterday, and I shared that too, because on days like that, I think it's important, even if people aren't members, to look and feel like I didn't personally say, I think we're going up because up is good or anything like that. No, what did I do the last 2 hours of the day? I let market profile, and I like my internals, and I let the charts tell me where it wanted to go. And it doesn't mean it's going to be right 100% of the time, but that was a pretty flawless concept. I didn't take a trade in it, but I walked people through the concept. All right, if we get here and this squeeze is setting up and we get the plus 600 ticks and we're above halfback and we do this and it's combining all of this information, then we're stacking the odds in our favor that there's a 70% chance or an 80% chance that in the next 30 minutes to the next hour the market will be higher. So I recommend, once again, I know it's tough if you guys work 12, 13, 14 hours a day, watch the last 90 minutes of yesterday's recording. I also shared it in the Facebook group, so by all means, that day is for anybody who wants to watch it. Obviously, you guys are all members, but if you have a friend that wants to see what we do or just wants to learn about adding all this stuff together, watch the last 90 minutes, maybe the last 2 hours of yesterday's recording from like 2 o'clock-ish to 4 o'clock. And that shows that I'm not the one facilitate. Okay, guys, I like Apple. It starts with an A. That's the beginning of the alphabet. An apple a day keeps the doctor away, so there's that too. So we're going to go long Apple. No, that's not how I'm trading. You might have success with that, don't get me wrong, but I let the market generate information. What is the market telling me? And then I can relay that information to you. Like I said, it's not the other way around, and that's how 95% of people trade. Their egos, my buddy told me to buy Dogecoin at 60 cents. Yeah, it might go to $1, who knows? But I think after this Saturday Night Live thing and, going into this weekend, I don't think Dogecoin's going to be at $1. Personally, I could be 100% wrong. I don't have a Doge in the fight. But just how normally markets work when they're up 25,000% in a matter of 6 months, 7 months, it's not sustainable, typically speaking. So signs of a bubble. But like I said, that's just how I view it and how using previous information. Doesn't mean it's going to be right. But you can have an idea and you can have a bias. I'm not saying, because obviously I need a bias. I need to either choose up, down, or sideways. So you obviously need to have something, but it doesn't have to be ironclad. It doesn't have to be written in stone. And the more flexible, the more lucid you are, in that it's just, I don't know, a better way of approaching the markets. And like I said, as far as the top stocks, I think sitting down and thinking of what type of technology will be used in the next 10 years is the best way. And I think technology is the best way to focus on it, because I don't think really gas companies and oil is going to be relevant. Maybe healthcare to a degree, but maybe, like I said, I'm in like 3 robotic companies, and one of them specifies in robotic surgery based stuff. So people can be in Japan and giving open heart surgery to people in Texas. That's pretty badass. So that is also medically based. Anything, with our genes and breaking, slicing, all that kind of stuff. I think that will be the future. So that's why a lot of, if we went down everything that ARK is invested in, I'd probably give the green light for like 90% of it. So I'd recommend checking them out too. ARK Investment, Kathy Woods, follow her on Twitter. And then they also do like a once a month kind of webinar kind of thing. I think it's 30 minutes long, and they just go over what they're in and, what's working with. And honestly, she's getting hammered too. Everything there basically is getting destroyed, but who cares about 3 months of performance or 6 months of performance when you're basing it off of, a 5 to 10 year, trajectory when it comes to that. Anyway, that was just wanted to deep dive into that, because I know it's frustrating to, watch a 30-minute YouTube video and add what that person's doing because they had a great day. And the next morning you're all gung-ho and super amped, and then you take 3 trades and all 3 of them don't work. So little by little, but I will say, as they're talking about my internal screen, it's my setup, but it's information that's being relayed to me. It's my job to decipher, like reading the matrix in a sense. What is the market, telling me that it wants to do? And obviously that doesn't happen overnight. You're not going to watch those 2-3 dedicated webinars and be in the room for a month and understand everything right away. But if you pick up on little by little, like focus on the tick just for a week, focus on the cumulative tick, focus on how the VIX reacts to that, take little by little and focus your energy like a microscope into those specific things, and then build from there. Once again, everybody has this massive funnel on their head and just trying to, or a vacuum, just trying to absorb and suck up as much information as possible. And that's just how we've ever learned. If I want to get better in history, I got to read this history book so I can get ready for this test. If I don't know about this math, I need to read this book about math equations so I can get the answer at the end. And trading doesn't work that way, unfortunately. Like I said, there's no big thing that teaches us to be ready to trade. That's why I said most people fail at it. But yeah, figured I'd add that. Brett's 246. I actually made a script. I tweaked my 82134 and just input his 246. So I have that. I shared that in in our Slack room. If you guys need it, I can share it tomorrow. For you guys that use Thinkorswim, and it will give you an arrow when they're crossing, so you don't have to look at his screen and be like, all right, is it that line? Is it that line? It's an arrow that pops up letting you know it's up or down, which is pretty cool. Jason just answered. Yeah, that's the thing. Where do you define how long have you been trading? You know what I mean? Like, how long have you been in fitness? Well, I watched that video today, so today's my journey. So it's tough for me to say, but I'll tell you my first active trade with real money in the markets was Facebook's IPO, which I think was May of 2011. So we're coming up on, 10 years of, I guess, being active and actually having money to manage. But I've been reading and was focusing on CNBC and got Jim Cramer's books. And, instead of going out, I was watching the very limited YouTube and 10 years ago, there was no information on the internet specific for trading there like there is today. I could go on YouTube right now and type in options 101 and there's 50 videos. Type that in 7, 10, 12 years ago, and there was just some old man with a flip phone camera going over stuff. It was much different. And I guarantee if you find most of these videos, they're not more than 6, 7, 8 years old. 10 years ago, YouTube was obviously newer and there wasn't much on there specifically for, learning to trade. It was entertainment stuff, let me do some type of dance or chocolate rain or whatever else was big 10, 15 years ago. Hide your wife, hide your kids, all that kind of stuff. Let me scroll.
Yeah, it's been screen time for me. The biggest thing is screen time. For when I start trading options, I sat for like 4 months and watched options trade every day. I just watched them, watched the volatility. It's basically screen time to me was the biggest learner. Biggest lesson was screen time. Watching how
honestly,
things react.
And that's why I recommend if you guys can be in here. Like I said, I know you have jobs, but you have to have a lunch break. I don't know what type of slave labor where you work 10, 12 hours and you don't have a single lunch break and you can't look on your phone and you can't do anything. When I was working full time, my lunch breaks, I was either reading a trading book, watching a previous recording of some trading related, or being in a room, like another trading room or whatever, 7, 8, 9 years ago. Like that was my lunch break. Everybody knew at work that from, whatever I wanted to lunch, 12 to 1, 1 to 2, whatever time I went to lunch, that time was 100% dedicated to trading. Because that's all I could do during the day. And if it was slow, I'd pull out my phone. I was paper trading options. I was putting in the work. And I know a lot of you guys are trying to do that. Just make sure you're spending the right time doing the right things. And nothing will be a better teacher than your failings. And I know that sucks. That's why I recommend paper trading. The only negative thing about paper trading is you're a multimillionaire on paper. And as soon as you go real, oh, that's an Xbox. That's my rent. That's my car payment. 3 more bad days and I'm done. That type of mental cascade effect. Like I said, that's why I focus so much on risk management, the psychology of trading, and I babble on about it every single day because that is your holy grail. You define your risk, position size accordingly, and have the right mindset. You are 90% there. It's not a line on the screen. It's not those red candles or green candles. It's not up and down. It's not left or right. It's not Charlie alerting about Alibaba. It's nothing like that. It's you following the same rules for every single trade. Now, the reasons you get in the trade can be different, But you guys, once again, watch my risk management thing. We went through my entire statement of every single trade I took up to that was at March or April, whenever I did that webinar. I think it was March. And you go over that and see that consistency. I'm only losing a couple thousand. I'm only making a couple thousand. Sometimes I'll have one-offs where I'll make 10 or 11 grand or whatever. And then sometimes I'll lose 5 or 6 depending on the scenario, but it's not crazy swings. You will never see me, hey guys, I lost 50 grand plus 10,000, negative 80 grand. Like, I'm not going to do that. That's not sustainable. I'm here for the long time. I've seen tons of people do really well in trading and piss it all away. So that to me is the worst thing. I would hate to grow my account to multiple millions and then fast forward 5 years from now and either be where I'm at again or even lower. I don't even think I could come back from that mental type of baggage or that mental attack. It's like, what's wrong with me? What am I doing? Am I stupid? Blah, blah, blah. That whole, and you're getting beat up. Your P&L's beating you up in the face. And that's another reason why I think it's important to be in a group, to realize that you're not the only one that goes through this. The last 5 or 6 weeks have been, I've had some decent trades, but where 80%, 90% of what I touch turns to gold, it's turning to crap. And it's like, there's nothing changing. Like, I like Disney's chart, I like this, and it's up, and then it's down, it's up, it's down. Okay, crap. Roblox, typically when IPOs break their price after about a month or two, they continue. It did, and then fell, and then it looks like it's come back, and now it's at the lows. So sometimes just trades don't work, and what sucks is when you get hit multiple times with losing trades, because then sometimes you feel that are you doing something wrong? And I just ask myself, have I changed the way I'm trading? Am I risking more? Am I not following my setups? And if the answer is no, you're following it. Yeah, no, you're right. Then there's nothing I can do to change it. It's just a crappy market for me, the way I trade. And I know it's funny, depending on what people trade and how they trade, some people are doing well. The people that don't look at their accounts that have a 401 are doing amazing because we're at all-time highs and they own Google and Amazon and the big stuff, and they don't look at it. For active traders, it's been choppy. Even though you look at a daily chart on the ES and it's been straight up. And you're like, how the hell does this make any sense? My P&L, I've been bleeding out 1-2%, have a great day, then 1-2%, then bleeding out. And it's been choppy for me. And then I look at the ES and the Dow hit all-time highs today. It's like, what the hell's going on? It's almost like if I just bought diamond calls 3 months ago or SPY calls and didn't look at it, I'd be up a crazy amount. But that's not how I trade. That's not fun, especially that, hey guys, I'm buying SPY calls. I'll see you in 3 months. Like, that's just not how it is. And sometimes that might make the most sense. Maybe in this current market, it's better to have a more broad approach, futures trading, index-specific trading, ETFs. You notice today I took XLP. I'm in XLU. I have a trade in XLF. Maybe having a broad ETF-based trading strategy for this market right now might make the most sense. So you have to be comfortable switching up. If, good example, you guys, I think talked about pennies earlier. If we were trading the same way we were trading the first 3 months, we'd be getting hammered. I'd be in 60 pennies right now and be down in every single one of them. Hoping and praying that big news next week, CEO tweet, pink current, uplisting, no talk of reverse split, whatever the keywords are for the week. And I would still be in red every single day. So guess what? I pumped the brakes. I'm in 3 or 4 penny stocks. All of them I'm down in, maybe 30, 40, 50%. And I'll either do 2 things. If it looks like they're going to continue to go to crap, I'll just get back the remaining amount of my money, chop it up as a loss, cost of doing business, and move on. Or I'll wait to the very end of the year and I'll sell for whatever the loss is if it's down, and put it towards my gains. Tax write-off, tax harvesting, whatever you want to call it. So in my head, it's a win-win in that sense. I'll either owe less in taxes or the trade's going to work. As far as for me, what kind of stops do I use? That one. So for futures, we did a dedicated webinar on futures. I talk about brackets and how I do that. For options, I don't have stops. I'm willing to risk the 1%, half 1%, 2%, whatever it is for that specific trade. Typically, if I'm closer to the money and I'm going out a month, 2 months, 3 months, I'm more willing to use maybe 1.5%, 2% of my account. If it's a week or two, like that DraftKings trade, it expires this week. It's an earnings, it's a potential ride up into earnings. Might not happen. If it happens, great. I'll make a small profit and move on. If it doesn't happen, I didn't really lose that much. So that every trade's going to be different in that way, but the same rules always have to apply. So I'm comfortable, and that was one of those aha moments for me. I would want to trade bigger because obviously if I trade bigger, I have a chance of making more money, and that was great when that worked. But when the downgrade happened, or the scandal happened, or the whatever happened and I'm down 3 or 4,000 in one day, it's like, ow, that hurts. Like, I don't like seeing me down that much. Well, how do you fix that? Trade smaller. You want to make it so no matter what you lose on a trade, it does not bother you mentally. We joke about it in here, and that's going to be on a t-shirt. My tummy hurts. It's even in our intro little video for that as a joke for you guys. Is, you want to get to a point that everyone's tummy in here, all 20-something people in here have had, and people listening to this recording later on, everybody who's ever traded, your tummy is hurt. You've either had ulcers from trading, or you're going to throw up, or you're going to have explosive diarrhea, whatever. Always that gut feeling of, this does not feel good, losing this much money. You know how you don't lose that much money? You have full control over it. You have 100% control over how much money you lose. You have zero control over how much you can make. Remember that. That is what keeps you in the game long term. So risk a very small percent of your account. I know it's tough. If you have a $10,000 account, you can't risk $2,500 in a trade. Because if that trade is the one that doesn't work, I could have 10 trades, and if 9 work, I'm great. If you take the one trade and try to max my size, or measure my size and do $2,500, and that's the one that doesn't work or expires worthless because you don't know what you're doing, you just lost 25% of your account. Now you need like 10, 15, 20 trades to be 100% just to get that back. So my advice is finding what works for you. Some people are fine risking more and saying, if I lose 25%, I'm getting out. The only issue with that is you could be at 20% today from a trade, and then tomorrow it gaps down $10, and now you're down 70%. Well, you couldn't stick to your plan because the stock gapped down. So that's why I rather risk the entire debit paid if I'm options trading, and going that way. Now, if it's not options, and if you don't trade options, a good example, Alibaba is going to take over the world. Alibaba taking over the world, and maybe I'll buy shares. Say, whatever stock A is at $5, I'll buy 1,000 shares. So that's $5,000. Maybe a little more than I would typically do on an options trade. But as soon as I take that trade, you know what I do? I typically put a stop in, and it depends on the stock. If it's a quick moving stock, and and I can once again experience. Sometimes a bid ask on a stock, even as it moves up, it goes from $5, $5.03, $5.05, $5.07, $5.10, $5.12. And then sometimes it's $5, $5.78, $6.90, $7.40, all within like seconds. When the bid ask is that wide, I don't want to get stuck on the way down. So I'll typically do, you know what I'm comfortable losing? About $500. So I'll put a stop in at $4.40 or $4.50 or whatever the case may be, because that's it might have a little slippage, but I'm not going to get blown out of the water. And sometimes you'll get stopped out. And what happens? It always that running joke. They come out, they find my stop, and then they take it back up, and that's going to happen. But more times than not, if you follow your rules, you will see success. So I'll put a stop in right away as soon as I get into the trade. I don't put a limit order in. I don't want to cap my upside, but I definitely want to have a safety net. I want to have a parachute for every single trade I take. There's not a single trade that will destroy me. Let's just say Lucid. I have, I think, 15% of my account in that. Yeah, if Lucid ends up, it's a scam and Saudi's, under fire, or the Saudi fund just blew up or something, and that goes to zero, that's going to hurt. I'm going to lose a good amount of money, but I'll still be able to trade. So that's the mindset. No matter how strong of a conviction, I want to buy hundreds of thousands of shares or something crazy in Lucid, but I can't because that's poor risk management. So just keep that in mind, finding what works for you. I can't tell you exactly, hey, once you get out of your trade, don't lose more than 20%. Don't lose more than 50%. I can't make those rules for you because I don't know your account size. I don't know what your comfort levels are. I just know I don't want to have crazy swings in my account. So what do? I make sure I don't have those crazy swings. It's as simple as that. So you have full control over that. So whether you want to only risk $500 a trade, then only risk $500. Yeah, but even if it goes up $100, blah blah blah, like that's fine. You're searching for consistency. The other thing is, Matt, too, I see your question. Not really a question, a statement about a daily goal and stuff like that. I'd be careful with that, especially depending on where you're at. Because if you get $40 on a trade and, I need $10 more. You take another trade, you're down $100. Then two things happen. You feel that you need to trade more to make up for that negative 100 to get up to that $50 plus, or as you're trying to force another trade, you're calling yourself stupid because like, wow, why didn't I just stop at $40? You ever see those little lists? $1 time, compound interest, and if you only make 1% of your account every day, you'll be a multi-millionaire. And every time I laugh when people send me, I'm like, okay, show me somebody who's done that. This little pie chart, show me that somebody has every single day a winning trade and they've been able to increase their account by 1%. I'm not saying it's never been done. I have just in my 11 years of, maybe even 12 if you want to round up, of trying to, focus on trading related stuff every single day. I've never seen somebody successfully do it that, maybe there's screenshots and it's fake. I don't know. But I've never heard of somebody that makes 1 to 2% of their account every single trading day, because losses are going to happen, So just be careful with having a set goal. I'm not saying it's not good, but at the same time, sometimes depending on where your mental state is, it can affect you. Oh man, I made $75, cool, and now I made $75 in the first 10 minutes of the day. What can I make now? And then you overtrade, and guess what? You get back that $75, and then you're like, why didn't I just walk away? And then that cascading effect of that mental beating up. So once again, trial and error, find what works for you. But most of the time, I don't focus on I focus on a setup, and that setup and those rules make me money. Money is the last thing I focus on trading. But we're here to make money. Well, the sooner you flip the script and start at Z and then work your way back to A, I guarantee you'll start seeing your P&L look a lot better. Sorry, guys. I'm scrolling
on the screen, I got, this was insider information for Amazon today, Insider Cow. This is yesterday, 5/4, all the way to here, 5/4. This is all May 4th, yesterday. Is today the 4th or yesterday?
Yesterday.
Today's the 5th.
Yeah,
this was yesterday.
Bezos.
This is all Bezos selling.
It was like $4 billion worth of shares.
Yeah, look at them all. Millions.
That wasn't helping the stock go up.
Yeah, he sold a lot, and that was all yesterday.
I don't look at that as necessarily a bad thing. On the flip side, two things. One, he's no longer the CEO. And two, just like Elon, these guys are rich on paper, but they don't really have much in the sense. I'm not saying this guy's struggling, but you know what I mean. There's a big difference between being the richest man on paper and actually having money in your account. So for them to sell 1 or 2 or 3% of their stake in companies, like I know Elon does that occasionally, and I know what's his face Zuckerberg does it, but I think Zuckerberg has it do it every single month, and he donates whatever to charity. I think he lives off 1% of what he takes out, and then he donates the rest to charity. But yeah, just it's good to be aware of that, because then sometimes if the stock's not looking good and you see that type of thing, that's another narrative or mindset. Well, does Bezos and his buddies know that this is the top? What's his face? Elon's brother sold the day before the top in when Tesla hit $900. I think he sold at $880 the day before or something, and the last time he did the same thing, the Tesla had a pullback. So it's like, do they know something? Or are they just paying themselves? You know what I mean? So it's tough to, however you want to figure that out, but or however you want to look at it, But I look at it if it's not their entire position, and it's not 50, if it's 1 or 2% of their entire worth, then I think it's just a matter of being a paycheck and not having to worry about it. Maybe putting that money other place, whether he's donating it or he's taking that money out and using it for Blue Origin. It's not his, Amazon was his baby and it's fully grown now, and now I know it's him and Elon go back and forth depending on the stock price, but being one of the richest people in the world, and you have all these other projects and they need money, why not take money from your successful business and put it in your startup? But Matt, to answer your question, I do leaps. I have leaps on CCIV. I have one. I got out. That's the other thing. I lagged out of it at the $60 range, because I'm like, as soon as this is confirmed that it's them, and depending on what the fine print is, I could see the stock dropping by half. And sure enough, it went from 64 or whatever to $30, $35, $40, and then bled out all the way down to whatever it's at now, $19, $20. So I still have one that's good till January of this upcoming year. I have the $40 strike, I think it is. So nothing too crazy out of this world, but if it doesn't work, oh well, I have shares, and if everything goes according to my mental master plan, then it would be irrelevant if that $1,200 or whatever expires worthless. The definition of a leap is technically going out into the following year, but that could be 7 months from now, 8 months from now, and that would be considered a leap. But I normally look at it as a full 12 months or more. So I have a leap in RMO, which I'm kicking myself for not getting out of when it went up to 13 on that news that day, because I was down like $2,000, and that day I was back to being break even, and it was like 5 minutes left of the bell, and I'm like, well, if this continues, blah blah blah, and sure enough, here it is back to like $7. So once again, sometimes it's hindsight. If I got out at that time, yeah, that would have been great. And then sometimes it could go to $25, and you're like, shoot, I sold that. Like QS. You guys remember QS calls? I sold them at $35, and QS 2 weeks later is going to $160. So I went from making $6,000, which was great, and I was happy about it, but it could have turned into a $200,000 trade. So that's just how it is sometimes, But I focus on the fact that I took a trade based off of X, Y, and Z, and I made money.
Guys, too, I want to show you before I go here. This was yesterday when we opened on the Qs and came down, and then we slowly creep back up and ripped at the end of the day. We had that big gap this morning. I said I wanted to see how this thing shakes out. We had that gap up, and then look where we came back to, right to this area, and then we had a nice bounce. So sometimes just being patient. We could have shorted, but sometimes if you go long or short out of the gate, you're like kind of like almost like a 50-50. If you get a big gap, usually it falls back, or if you get a real small gap, you usually get a nice run up or down. If you get a gap down, sometimes we run down, but on these gaps, the gap $2, $3, $4, I don't like chasing them. I don't like chasing that gap. So here's a closing line of yesterday, the white dotted line. So just know that that's what I like to. I don't like to chase those gaps when I say I want to see this thing shake out. So that's why I chase small caps in the morning, because they're easy to find.
Dave,
And Matt, if you're not making money, just find your own rhythm that you like to trade, whether it's options or small caps or pennies or whatever. I mean, we trade it all, so we can guide you to what you want to trade. I trade everything. Most people don't. Some people either just pennies, or some people are trading just small caps, or some people are just trading options. You could even trade, you could trade spreads. Take Batman's trades on all the spreads. He does quite well on them, and they're a lot less risky than going directional. So just pay attention maybe to what he's doing, and then find out what you like, and then your risk tolerance, and then your time, whatever time you can spend in here. I don't know everybody's schedules, but.
David, I literally dedicated 2 hours to going over my internal screen. So if you go into offthecharttrading.com members area, recordings, you'll see it under the recordings tab, and just click Nick's webinar on internals, and I go over each of those things and how I use them. Now, I'd rather you watch that and then come to me with questions to go about it, but I talk about the ticks daily. That's probably, if there's a top 10 words I use throughout the day, it's going to be the ticks, VIX, and some of the other internal stuff. So it's just mainly a measure of tick in the sense of if Apple's at $100 and it goes to 101, in the sense of 1 penny up, that's a tick higher. So at that time, what it's measuring is on the New York Stock Exchange, how many stocks are going up, ticking up versus ticking down. So if you get plus 800 and you have 800 stocks all going up at that same time, that just means to me, I don't care about volume. That's just showing me there's strength in the market. It doesn't matter which market. Plus 1,000 ticks, or even negative for that side. Negative 600, negative 800, negative 1,000. So it's only relevant in the short time frame for me personally. It's kind of like putting your hand on the heartbeat of the market. And who cares what it was reading, 30 minutes ago or an hour ago. Now, I'll talk about tick distribution, and as far as, look at it overall, it is, slowly moving higher. But then we also have the cumulative tick that adds all the major indexes and basically makes it as one whole thing, which is great. One of the best things. That's typically like a $250 indicator. I share that for free. So, and that's the other thing too, talking about, you mentioned scripts and stuff. I'm not charging you guys Me and Michael Friedberg, whatever his last name is, spent hours and hours and hours making those trend-based candles and those alerts and all that type of stuff. You don't really you don't really appreciate coding until you have to sit there and write it and then hit enter and then find one error. And why is that color going blue? We're not even using blue. And then you got to literally read it like a fine-tooth comb, remove one thing and then add it. So it wasn't easy. And if I was like all these other websites, I would charge $200, $100 for it. 80% of people would pay for, and that's a bunch of money. But we're not those type of people. We're here to help people, and trading's hard enough. You're paying us to be here, and then on top of that, it's safe to say you're going to lose money trading. So why get hit on the back end too, trying to get the perfect setup and something that works, and you spend thousands of dollars. And I have spent a lot of money on indicators, and I have spent a lot of money on classes and stuff like that. So that's another thing too. You're paying for the experience. I love that little meme that goes around. If a job takes me 30 minutes, you're not paying me for 30 minutes. You're paying me for the 20 years or 10 years or 15 years that it took to learn that specific skill. And I love that because that's basically how this is. Listen to me. Focus on risk management. How do I know that? Because I spent 11 years struggling with it. You know what I mean? So, like I said, the ticks are great. I'm not going to personally share my screens because we're using OBS, so I don't want to throw that off and have to go to a different screen. So I'll just keep it on GoToMeeting, meaning I'm not the one sharing the screen. But by all means, watch that webinar. I talk about the ticks yesterday too, how plus 600 and stuff. That's why I'm really recommending maybe start with yesterday's regular session and watch the last 2 hours. I don't know what time you go to sleep. It's 10 o'clock now. If you got nothing better to do and you don't go to sleep till 12, as soon as this is over, go watch the last 90 minutes, minimum 90 minutes, preferably 2 hours, from like 2 o'clock to 4 o'clock yesterday. And then sometimes it might be quiet or whatever, just skim through, hit the little plus sign and plus 10 seconds and just get to the meat of like, okay guys, I see this, I see that. If this happened, we might see liquid, all that type of stuff, because it's literally a play-by-play on where I thought the market was going and why. I'm not just throwing a dart and closing my eyes saying we're going to go head higher. I gave multiple reasons on why. It doesn't mean it's going to work. And you never want to assume, well, every time this whoopty-whoopty sets up, that means we're going to go higher. So I'm going to put 30,000 contracts in, Uber or SPY calls or whatever the case may be. You never want to trade like that, because you always want to assume that one time is when it doesn't work. Once again, always assume the worst is going to happen, and then you don't really get surprised when it doesn't go your way.
Yeah, here on the screen, what I got too is when he was talking about this yesterday, I went over this and we talked about it after hours yesterday when Nick left. This is the ticks right here. So we had a low a day tick right here, and then we had another low right here. This was at 11:15. If you look at the time stamp on the Q's low, he came in, I think he was talking about, it's like he said, the last 2 hours of the day. We had a low of 11:55 here, and the profile was very thin here at that time. So that just means there's no trading there. That long wick is indecision and rejection. So when we had this was like a fake out. I mean, this is the way I'm looking at the ticks during the day. After we get settled in, like an hour or two, if you are patient and watch this the ticks are in an uptrend here. We spent a decent amount, over the zero line. But all these were engulfed with green candles too, rip ups. Like there was a couple rip downs, but I'm watching the action of the ticks during the day. We had a low a day out of the gate, and then we had this low here. But this was a failed low, and it immediately reversed up, and that was like back in here. So 11:15. This was 11:15 right here. So we had the low a day on the tick. This was a higher tick. So this is the same thing as a divergence. So you got your 1150 right here, you got your 1150 here, and you get a reversal, but you have your low a day is here on the chart, but your low a day on the ticks is here. So you have a divergence here. So we're watching all kinds of internal things during the day, giving us that, and then you have higher lows, higher lows, higher lows, higher lows, higher lows here. So you're watching that. When Nick started talking, I was watching everything I was listening to what he was saying and watching my internals on what I'm watching. And so I'm watching everything going, okay. And then I see the rip at the end of the day. So I watched all that yesterday. I watched that unfold. And today's a different day here. But I watched all this fold in an uptrend, and then, end of the day we ripped, and that's when Desiree made that nice chunk of money on the SPY on that nice rip here. Whether you got in, we talked about being over the 8 and the 21. We had to cross over here. We talked about that, while it was happening, even though we didn't get up. We were talking about being over the volume point of control. The volume point of control was here. So the center, again, once we found this and based out, this became support. So we came, tested it, support, and it takes off. So you get a nice move here. Yeah, this was a nice move down. We missed it, but this was a really good move here, from the lows. And then at the last minute of the day, I was telling you guys too yesterday and today, if any of you are new in here, that they are doing 3 times a week expiration on the Qs as well. So yesterday the Qs were trading here, and the SPY was trading here for the Wednesday expiration, which makes those kind of cheap yesterday, So that's nice. Instead of going out a week, there's no reason to go out a week. We talked about that. After hours, there's no reason to go out a week or two and buy time if you're just going to day trade this and trade this till 4:15, because this trades till 4:15 in the afternoon. So the Qs and the SPY, so you guys can trade either vehicle you want. But
I don't think we have anything else. The other thing is I'll just probably end it on this unless you guys have any last minute questions. But Matt was asking, do I recommend options? Or I guess we both can answer this, or if Ed wants to, whoever. But as far as trading ETFs better than individual stocks, there's been a few times that I focus on specific ETFs, mainly because it's a cheaper vehicle than trading, say, like Amazon or Google. Like when we've done this before, that trade before, we did a write up into Amazon's earnings. Not this most recent one. I think it was, I guess, the last quarter. So we'll say 3 months ago. I know a lot of people took it and a lot of people made money. I got out as per usual, like the next day, and I'm like, oh, cool, yay, like $2,500. And then I forgot who it was. There was a few people in here that held the rest of the day, and XLY shot up like $7 or $6 or something crazy off of Amazon going up. And I know some people made like $4,000 or $5,000 off like a $1,500 trade idea. So that was awesome. But you risk $1,500. Yeah, if you put it all in Amazon and you bought out of the money and it moved and stuff like that, then maybe. But you'd only have one contract, and $1,500 on the week of the earnings. I mean, you'd be like $500 out of the money. So it was cheaper to play XLY. Why do we play XLY? Because it shifts depending on the market cap, but I think it's now about 25%, give or take. So 1/4 of the entire XLY Spider ETF is Amazon. So obviously, if Amazon is going up, so is XLY, unless the rest of the other 3 things. But typically speaking, if Amazon's up $150 on the day, XLY is green on the day. We played financials instead of finding specific, either Bank of America, even though it's a cheaper way, or my JP Morgan. You can play XLF. You can play XLE. These are fairly inexpensive ETFs for the most part. So you could buy at the money or even in the money, and it's a lot more forgiving because you avoid the single stock risk, where if, let's just say we go long because of Amazon, and if Amazon drops $100, XLY might only drop $1.50, $2 or something. So instead of us having a max loss in Amazon, we might only be down 20%, 30% on the XLY calls. Granted, if it's a Friday afternoon and this happens, then yeah, it's going to, because of theta and stuff. But we'll say a month out, argument's sake. But yeah, I mean, try that. If I say I'm going long Boeing, just play XLI, play the industrials. If I say, hey, Google's looking good, just play XLC. You can trade that way and see if that works for you. Maybe that's your aha. Maybe, if you're looking for a more conservative way of trading and not having to worry about the specific stock and what it's doing, then trade I have an ETF screen. I cover all the major ones. Hey, we're talking about pot and it's potentially going to be, federally passed and yada, yada, yada. Why worry about Tilray? If Tilray has a bad report or does, an offering and they drop, but the rest of the sector is going up, then, you get screwed that way. So why not just buy MJ? Buy calls in MJ. I'm sure at the money right now, I'm not looking at it, but I guarantee MJ calls at the money are probably going for 80 cents, $1 or something. I mean, it's not expensive. $80 for one contract. Once again, though, if CGC goes up $5 and MJ might only be up $1. So you're capping your upside potential, but you're also, it's almost like in my mind, it's almost like doing a vertical, because you are limiting your downside risk. But you're not worrying about doing other spreads. It's just like I said, it's, oh man, look at Amazon up $100. Yeah, XLY is up like 2. You know what I mean? So it's not, you'll still make money. It's just obviously not as much, but you're risking less. So I try it. You know, that might work for you. I know some people that literally only trade the SPY. That's the only thing they trade. So if you think that, you know, like I said, if you use Think or Swim, or by all means, tomorrow ask me and you can take a screenshot and write them down. You know, add them to your watch list and just see. I also have a script I shared, and that's also shared with you guys. The main one on my main setup, I call it. It's all 11 major sectors, and it will show if it's green or red on the day. That's a great tool. Switch to it and add those labels at the top of your screen. And if you see financials are the only thing green on the day, and you think that there could be a reversal, then play the XLF. You know, play the financials. Or you can do that top-down approach where you do, Bank of America calls. You know, that's why I say, if I say financials are looking good, you need to start those gears, unlock those gears in your mind that say, okay, Nick's saying the financials are moving. What's a financial? A bank. Okay, what's a bank? I don't know, Bank of America, Wells Fargo, Morgan Stanley, like stuff like that, JP Morgan, and then you can look through those charts real quick. Oh, wow, look at JP Morgan. Everything else is up 2%, and this is up 5%. Well, there's strength there, and that's where money's flowing into. So you want to go with the stream, not against it. You want to go with the current, not against it. You know what I mean? So if Warren Buffett and all his buddies are buying, JP Morgan, you want to be with them. You want to be a remora fish. You want to be under the shark. Unfortunately, once again, the ego and the mind thinks that we're the biggest, fish in the ocean, when in reality, every single person here is whatever's the smallest organism in the ocean. We're a drop of water in an endless ocean when it comes to that kind of stuff. And that's the mindset you have to have. If not, your ego gets in the way and you try to be right. You don't try to make money. So by all means, try it. I can't specify that that's the right thing to do, but sometimes it's better to have a broad approach. And that's the other thing too. It seems like a lot of people are doing different things. Like energy's up halfway through the day, but then it drops, and then financials are up, and then XLK's up. Normally rotation happens over weeks, not 10 minutes and then it stops, or 20 minutes. So there's I feel like a lot of people don't know what they're doing, or each fund is doing something different. And that's what's kind of screwing up this market. So I control billions of dollars. Oil's a dying industry. Let's go long. What's been the second beat up? Yeah, let's go long financials. So they pull their money out of Exxon and Chevron or whatever, even though that was a good trade today. If anybody took my Exxon trade from, was it yesterday, the day before we got in? I got out this morning. But I'm just saying in general, like finding specific stuff in that. But, we're getting out of XLE. Well, then obviously Exxon and all those, Chevron, and I mean, those two are 50% of the XLE combined. Those are going to get hit. And then what is up on the day? Oh, it looks like staples. Okay, so when I say staples, I want you to think Coca-Cola. I want you to think Walmart and Target and all that type of stuff. And either trade those specific stocks that are moving, or just trade the entire sector. That's what I did today. It's good to mix it up sometimes. You don't always have to be 100% dialed into one thing. I know in the beginning that's what it feels like. I need to master being a futures trader. I need to be an options trader. The longer you trade and the more flexible you are, just more fluid, it just makes it easier, at least to me. Like I said, if the pennies are where the money is at, I'll be there with you guys chanting it on. The moment the sec's involved and this and everything's getting shut down, and every time it looks like it's going to take off, it gets beat by market makers, I'm not going to trade that. You know what I mean? I'm going to trade Exxon. Is Exxon as sexy? Am I getting crazy returns? No, but I made over $1,000. I made 80% of my money. So that's just how I view it. Exxon's not a fun trade. It's not a sexy trade, but I made money. And that's ultimately what I'm here to do. I'm not here to, I'm here for the long time, not the good time. I know that's kind of the opposite of what that saying is, but that's how I look at it. Or are you going to mention something, Brett, or are you just scrolling? You're muted if you're talking to us. We can't hear you, Brett.
doing a live video and off the charts because I've got 3 messages about people not being able to find the webinars and the recorded sessions in your workspaces.
Wait, that are members?
Yeah. So I'm just going over it again real quick.
You're a good man. Futures look nice. Widespread green.
All right, I'm done. All right, guys. Guys, I've had a... Oh, shit. Post now.
Nick, what?
Videos ended. Available soon.
Is that
I didn't
me?
say
Is that me in the
anything.
past? Go long,
didn't say-
Tesla! Put it all in
Yeah.
Tesla! You were right! You were
Oh my
right!
god, I didn't save it. I gotta do it again.
Yeah, before you do that, check your messenger.
Me?
Yeah, you.
Messenger. Let me look. Messenger.
In private.
It's in private.
This guy.
The man with the Pepsi Coke drip.
Yeah, jeez. I just picture him like 90 years old and has an IV of Coke. Anyway, I don't see any other questions, so it's been going on about 2 hours. This should be a long, nice, fun record. Brett, you're gonna have to give me the login information to YouTube because I don't have that or whatever, and that's the other thing too. We're gonna be launching the
hell?
channel, so
I can't even. What the hell's going on here? Oh man. All right, I'm done here.
all right.
I got kids sitting here. They finished with their homework too, so.
We'll double check it. All right, I'll end this. Like I
No,
said,
delete it.
tomorrow. Whatchamacallit, we'll try to upload this specific one to YouTube, and then we'll make that one private, and then we'll share the YouTube private link for this recording, and in theory that should work. So let me end the recording. Like I said, it's about 2 hours long, so a decent one as usual on that. And as always, guys, if you're watching this in the future and you were, nice enough to watch all 2 hours, I would, if you have any questions, reach out to us. Like I said, just the more effort you put into learning about this stuff, the better your returns will be. And like I said, we're always here to help you guys.